Today, I want to talk about how Citadel will soon go bankrupt as a result of shorting AMC. I want to talk about the massive unrealized losses that many banks are still holding from shorting meme stocks, and how as a result Citadel is struggling to stay afloat. So stay tuned and let's make some money. I've also got an announcement for something I'm really interested in trying and starting with you guys. I'll put this announcement at the end of the video so I don't clog up the AMC news. So first I want to dive straight in with the key information. So, Samuel Clemens tweeted saying I called this one out as to one of the reasons early on as to why the buy button got taken away, but here's more confirmation that was recently found. He said GameStop, AMC and other PCO stocks were part of the Russel 2000 at the time and got a number of large players upside down in their short positions. So here we have an extract from the financial statements of the Ultra Pro Short Russel 2000 ETF. This is basically a 3 times short ETF for that Russell 2000. It basically pinpoints at a point in time the position that many of these major banks and institutions had at the 31st of August 2020 pre the January run-up, and it's been extrapolated to see how much these funds would have lost or were losing in January of 2021. So here you can see at the 31st of August, many of these institutions had massive short positions on this Ultra Pro Short Russell 2000, including Bank of America, BNP Paribas, Citibank, Credit Suisse International, Goldman Sachs, Morgan Stanley, Societe Generale and UBS. Many of these institutions had upwards of $100 million, even $147 million shorting this ETF. But many of these institutions and banks at the 31st of August had a massive unrealized loss position. UBS had unrealized losses of 25 million, Societe Generale unrealized losses of 122 million, Morgan Stanley unrealized losses of 30 million, and Credit Suisse unrealized losses of 5 million. On top of that, we also had Bank of America with unrealized losses of 38 million and BNP Paribas with unrealized losses of 21 million. Now at the time, August 31st, 2020, the Russell 2000 was trading at $1,577. But come January 28th, that Russell 2000 had increased massively as a result of GameStop, AMC and other PCO stocks up to $2,111. That's over a $500 move in the Russell 2000. Remember, this ETF is a short ETF, so when the Russell 2000 goes up, these institutions were losing money. But also remember that it's a 3 times leveraged short ETF as well, so when it goes up, they lose 3 times as much money. And not only did this ETF index go up, it pretty much increased by an entire 33%. So an increase of 33% on the ETF is a loss almost of 99%. This is why the buy button was pretty much forced off back in January 2021, because many of these institutions and large banks were massively upside down on their short position. And what's actually really interesting is that even to this very day, the Russell 2000 is still trading above what it was trading at in 2020. Even though stocks fell throughout 2022, the Russell 2000 is still above 1,577 points. Right now, the Russell 2000 is still trading at 1,775 points, over 200 points above the August 2020 position. So that means these banks and institutions are still upside down in their short positions, and it's not got any better for them. Signing up to Moomoo is free and it's easy, it just requires that temporary deposit, but it's a really great way to help support the channel. You can currently get a guaranteed free share of Tesla or of Google and up to 15 free stocks on top of that, worth up to $2,000 each, which you could always use to buy more shares of AMC, GameStop or of any other stock. All you have to do is sign up to Moomoo using the link in the description below and make the required qualifying temporary deposit. And on top of that, Moomoo is very easy to use. They've got tons of technical indicators and advanced charting tools and their own options trading platform. Biotech Moose also tweeted saying Citadel was involved with coordinated collusion to remove buying to prevent a short squeeze against their AMC and GameStop short positions in January 2021. He asks, what has Citadel been up to since, attaching a bunch of screenshots, and asks saying, does this look like a thriving company to you or a hedge fund fighting to stay afloat? Many of these articles about Citadel are to do with hedge funds losing $6 billion more betting against meme stocks. There's also Citadel losing billions as hedge funds are getting dragged down, and congratulations to Citadel for posting a $94 billion loss for Q2. There's also calculations as to how much Citadel is losing every day shorting AMC, and even LinkedIn posts as to why Citadel's customers are about to lose everything. Again, that's just one screenshot of article headlines. There's a second screenshot and even a third screenshot of negative headlines surrounding Citadel. About Citadel's trading revenue sliding 35%, about Citadel being fined not only by the US SEC, but by Korean regulators as well. You've also got articles as to how Citadel chose to profit from a cancer drug company by shorting it, and how Citadel Securities is accused of illicit trading tactics. As Biotech Moves added, this does not sound like a successful, thriving hedge fund. It sounds like a hedge fund that is fighting and struggling to stay afloat. And again, something that potentially suggests Citadel and these hedge funds and banks are struggling even more is Sears' performance today. The Sears stock has recently been trading for 0.3 cents per share, but today alone that price increased to $1.99, a 70,000% gain in a day. This isn't just some random OTC company, this is Sears that we know is part of that meme stock basket. We also know it was a previous target of those hedge funds that have been shorting companies to destroy them. So seeing Sears up not just 100, 200 or 300% on the day, but up 70,000% on the day, I think spells trouble for those hedge funds. On top of that, StockSense Frank has also presented the total volume of FTDs for just AMC over the last few years. We can see back in the day in 2017, 2018 and 2019, AMC barely racked up any FTDs, $93 million in an entire year and $170 million or 0.17 billion in an entire year for 2017 and 2019. But that increased rapidly in 2021, obviously up to $4.5 billion for the year. Interestingly, that actually dropped significantly in 2022 down to just 1.6 billion, even though that's still massive compared to any year on record. But already in 2023, that number has already doubled from 1.6 billion up to 3.22 billion, and the year isn't even finished. It's actually quite interesting because in 2022, the AMC stock price was significantly higher than it is right now. But right now in 2023, we're racking up way more FTDs. Not only just the number of FTDs, but also the value of those FTDs as well. $3.2 billion in FTDs in supposedly a dying theatre chain company is absolutely ridiculous. It clearly goes to show somebody has a massive short position out there that they simply can't cover. And as a result, they're failing to deliver on their short position pretty much every single day. And the FTD position is getting larger and larger. I wonder just how large those FTDs are going to get for the remainder of this year in 2023, and if those FTDs continue into 2024, or if AMC squeezes first. Gollum Stocks has also tweeted saying that MarketWise shouldn't throw stones at glass houses. We know MarketWise or Investor Turf have been writing tons of FUD articles about AMC, but it seems MarketWise isn't really doing so well. In the last month alone, even with all of these FUD articles, AMC is up 35%, and on the flip side, MarketWise is down 16%. Clearly, it seems that AMC isn't the company struggling, and in fact, MarketWise is struggling. Now, I covered this article in my video yesterday about how retail investors still own the majority of AMC shares, but Suspended POS had something interesting to add. He tweeted saying the mainstream media is all of a sudden admitting that retail investors hold the AMC float, after the mainstream media has spent the past 3 years telling you pretty much every single day that retail investors have sold. The media has been telling us retail investors have sold and that AMC is falling, and now is the best opportunity to sell your AMC stock. But now, all of a sudden, 3 years later, they've gone back on their word, saying that retail investors still own the float and always have done. I wonder if they're going to post some kind of apology for trying to short and distort AMC by spreading lies, but likely not. And now onto the announcement. I've been making AMC content for a while now, and that won't ever go anywhere. But I want to do something even more for you guys and give back to the community. Some YouTubers like Ken and Grace talk about AMC, but they also help their audience make money on the side, whether that's to buy even more shares of AMC or just for some regular spending money. The only problem I have with Ken and Grace is that he talks about all of these other stocks, but he sometimes forgets AMC, which I definitely don't want to do. So I'm thinking of adding a 1 to 2 minute segment at the end of my videos to talk about fast moving momentum news plays. That way, if you're not interested, you don't have to watch it, you don't have to trade any of those stocks, you can simply fast forward the video or click away, and it won't get in the way of my regular AMC videos. But if you are interested, it's always there for you guys. I plan on finding these fast moving momentum news plays, and in my morning video giving some trade ideas and trade alerts, and then in my evening videos recapping those ideas, recapping those trades, and showing you how much money you could have made. And if this is something you guys will be interested in, please be sure to leave a comment down below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.